China's monthly average trading excess in the U.S. hit a recording top of almost $29 bn, pound 22 bn, in June as supply to America remained powerful. The figures go a 1 week following the trading war among the two began, in the U.S. formidable tariff on $34 bn of China consumer goods, and China retaliating. Analysts wait to see the effect of the tariff in July's figures. We wait the trading numbers for July to frustrate with house while the at first circle of U.S. tariff took impact, told Amy Zhuang, China analysis at Nordea Banking in Singapore. Yet, we do not wait a dive since such tariff just aimed $34 bn cost of consumer goods that is quite little compared to China's full trading, she told. In the at first 6 months of the year, China's supply to the U.S. rose 13.6% of a year over time imports of the U.S. enlarged by 11.8%. Its trading excess in the U.S. above the identical time was up of recent year. As the planet's greatest exporting country, China has endangered reciprocal activity versus the tariff and incorporated how it would gatehouse a appeal in the Planet Trading Organization. U.S. CEO Donald Trump card had already endangered to levy further tariff if China, the planet's greatest exporting country, retaliates. China continues to gain of powerful world consumer demand for its consumer goods for currently, the growing trading tensions in the U.S. has the capacity to wound both of sides. Amy Zhuang has alerted how down there could be bang-on effects if the U.S. revenue in its suggestion for a new circle of tariff on $200 bn of China consumer goods. Targeting such a big sum of main consumer will necessarily include an impact on U.S. bloating. Others say the newest information shows how hard it will be for the U.S. to win the trading warfare, disputing how Americans wish to buy China-made means. David Kuo, head execution of the variegated Stupid Singapore, told U.S. tariff will growth the price of China imports but they are hardly to retain U.S. consumer completely. Yet, he told, China has L stock option. Beijing could bring the effect of U.S. tariff on exporting countries by depreciating the renminbi to do its consumer goods more profitable for us consumer. Yet, a reduced renminbi would do it more than costly for China to importing U.S. consumer goods. So we would be behind to box A, Mr. Kuo told, in China export more than to the U.S. rather than it buys of the nation. Trading wars are not lightweight to gain, he told.